very excited to welcome you here today. If you haven't done so yet, please take a minute to introduce yourself in the chat. I'm joined today by my colleague Fershte. Fershte, want to introduce yourself?
Absolutely. Thank you, Mona. Hi, everybody. I'm Farashte Amarsi. I'm an engagement manager here at Techstars based in New York. As Mona said, we're very happy to have you all here with us today. We have a diverse set of people joining us, ranging from corporate partners, investors, foundations, potential customers for startups, and other fintech entrepreneurs. A special thank you goes out today to our partners who have supported this effort: ABN AMRO, Amex, Discover, Fujitsu, JP Morgan Chase, MasterCard, Kona Capital, Silicon Valley Bank, UBS, and the UN Capital Development Fund. We're very grateful for their commitment to elevating this challenge and awareness around financial inclusion more broadly.
Awesome. The Techstars FinTech Challenge, focused on financial inclusion, is a competition we launched in May. We were seeking the top startups building solutions serving the unbanked and underserved. We had hundreds of applications for the challenge from around the world. And from that, we've selected 20 companies doing amazing work in moving the needle on financial inclusion. These companies are operating in both developed and developing markets and offering solutions across the financial inclusion spectrum and helping solve real problems people are facing. We're featuring a wide range of themes from financial literacy to education, student debt, access to credit, and improving credit health. So there's some amazing entrepreneurs presenting today, from established companies to some truly up and coming stars that you won't want to miss.
We have a packed agenda today, and here's how it's going to work. In a moment, you're going to hear from Maël Gavet, our CEO at Techstars, on why financial inclusion is important to us. After that, we have a fireside chat with Marla Blow, president of the Skoll Foundation, which is facilitated by Peter Stout-King, the fintech practice lead at Techstars. After that, we'll have 20 startups presenting, and we've divided them up across three different stages. They are the emerging stage, the growing stage, and the scaling stage. Each stage will showcase 6 to 7 startups who'll present for about 5 minutes each. You as an audience member can jump between the stages as you see fit, so make sure to catch as many startups as you can. We're also going to share more information about the startups after the presentations.
And once the presentations have wrapped up, we'll all come back together on the main stage for brief final thoughts and instructions on how to participate in the expo booths and networking session. The expo is where you can dive more deeply one-on-one with any of the presenting companies, and you'll also be able to go into the hop-in networking feature and meet more of the attendees. We'll share more details on this once we all regroup back here after the presentations. We'll have 20 minutes in expo booths and 20 minutes in networking, and we encourage you to participate, ask questions, and make new connections. If you have any questions in the meantime, please use the chat function to communicate with the Techstars team. And with that, I'm excited to welcome Maël Gavet, CEO of Techstars.
Hi there. Good morning, good afternoon, good evening. Wherever you are, I'm seeing people coming from all over the world. Welcome to the Techstars FinTech Innovation Challenge closing event. It's really awesome to see so many of you joining us from around the world to support the founders who are presenting today. I want to say a special thank you and welcome to the 10 challenge partners who are with us. Faritesh mentioned you. Thank you so much. Your contribution to this initiative over the past 5 months has been very much appreciated, and we really look forward to continuing to engage with you on this really important work. I also want to say congratulations to the 20 companies that are about to present. I can only imagine how stressed you must be right now. I can tell you that you're going to be awesome because I've heard so much about you, and I know that this is going to be a really interesting presentation from all of you. So go for it and present your ideas to the world today. The focus of today's event and the now concluded challenge is really important, and we really wanted to focus on financial inclusion for our first FinTech Innovation Challenge, because entrepreneurs, underserved individuals, and owners of small and medium enterprises benefit tremendously from being incorporated into the formal economy. And when this group are brought into the formal sectors, big business wins, bank wins, governments win, citizens win, we all win. And financial inclusion is really something that can change the world. At Techstars, we take reaching sustainable development goals very seriously, as they were defined by the United Nations. And financial inclusion is one of the 7 enablers. Is an enabler for 7 of the 17 sustainable development goals that were defined there. And so this is, for us, this challenge is very important. Financial inclusion is something that matters to us tremendously. We do believe that moving individuals into the financial mainstream is not simply an aspirational goal, it's also totally attainable. I'm sure you're all very familiar with some of the statistics that I'm about to use, but there is over 2 billion adults worldwide who are unbanked or who do not have access to a bank account. There's over 200 million small and medium enterprises which are poorly served by the existing banking system. Many of the unbanked people live in developing countries, including here in the US where I am today. There's 1 in 4 people in the US who do not have a bank account. So fintech can attract new customers with financial solution related to payment, to savings, to lending, to investment, and to insurance, fundamentally really improving the lives of these people and laying the foundation for what I would call a shared prosperity. We believe that supporting fintech through initiatives like this Innovation Challenge is a way to help close the gap between those who have access to financial services and those who are left on the sidelines and who shouldn't be. Digital financial services powered by fintech have the potential to lower cost by maximizing economies of scale, increase the speed, security, and transparency of transactions, and allow for the delivery of more tailored financial services that serve the poor. When we talk about accessibility and discrimination, we have to remember there have been major hurdles in the formal financial system since inception, and emerging fintech solutions offer a way to overcome these hurdles. This is why we're so optimistic, and this is why I'm so excited about this challenge today. Recent progress in technology has allowed fintech to emerge as a way to break down these barriers and really positively impact the world through financial inclusion. Unfortunately, much remains to be done, and we at Techstars are really committed to working with fintech founders around the globe to achieve impact in this space. The 20 that you're gonna see today, but also many more after that. We are already one of the largest global pre-seed investors in the world. We have more than 2,700 portfolio companies, and among them, 500 are fintech companies. We now have a little over $800 million of assets under management, and we work with our founders with our network to help them succeed through every stage of their startup journey. Right now, our network has reached $207 billion of portfolio valuation, and it includes 15 unicorns, 6 public companies, 69 companies with a market cap over 100 million, and $100 million, sorry. And we're thrilled that 2 out of every 3 companies presenting today are our portfolio companies. We're very, very, very proud of you. Fintech's role in fostering financial inclusion cannot be understated. If anything, I'm sure you all seen that with the current COVID-19 pandemic, the urgency for utilizing fintech companies to keep people safe and the financial system functioning has increased. A lot of these fintech startups have helped or are helping, as we're speaking, governments quickly and securely provide people important support like cash transfers and any other kind of financial assistance. And they deliver emergency liquidity facilities to business, large and small. Fintech is truly changing the cost equation and increasing the benefits for all parties. It is making it more cost-effective for legacy financial institutions to reach previously untapped markets, and allowing new markets entrants to better serve customers at every part of the economic journey. We really see how financial institutions are digitizing the customer journey to create a seamless customer experience, utilizing technology to increase customer reach, make access available on demand 24/7, and again, decrease transaction costs. This is why this is a win-win for everyone. These fintech solutions are also allowing people to transfer funds, including cross-border remittances, and allow them to pay bills from their home or in a store with limited to no physical contact. The potential of financial technology is much, much larger than what has been achieved to date. And I know that the people who are watching us today know that even better than me. The coronavirus crisis has highlighted the benefits of digital financial services in many different dimensions, and its critical role in achieving the sustainable development goals that I mentioned earlier. All right, so we're going to continue to see massive innovations in the digital finance space. And because of that, it is really important for us to get financial inclusion right. And again, back to what I was saying at the beginning, this is why we decided to make this first challenge focus on financial inclusion. Connecting people to capital is really important, not just because it's the right thing to do and because it will make you feel good, but because it makes sense from a business perspective. Helping individuals at the bottom of the income ladder take advantage of economic opportunities is important, and it helps the world truly be a better place for every one of us. Ensuring that as many people as possible on the planet are connected to our global economy and its benefits is important. And I hope you are as convinced, if not more convinced than me, of that. That's it. That's why financial inclusion matters. That's why through our fintech practice, we will continue to invest in and support startups targeting the unbanked and the underserved. There's so much potential. Again, I want to congratulate the companies selected to present today. I want to thank you so much, the partners that have been so helpful along the way to help this company be where they are today. And I want to thank you for joining us today. Enjoy the rest of the event.
Thank you, Mayel, for those wonderful remarks. Hello, everyone. My name is Peter Stoutking, and I lead the fintech practice here at Techstars. We're very fortunate today to have as a guest Marla Blow. Marla is the president and chief operating officer at Skoll Foundation, a private foundation based in Palo Alto, California, which catalyzes social change by investing in, connecting, and championing social entrepreneurs and other social innovators. In addition to her role at Skoll, Marla serves as a member of the board at Square and a member of the Fintech Advisory Group of the Federal Reserve Bank of New York. Previously, she was a senior vice president of social impact for North America at the Center for Inclusive Growth at MasterCard. And she also has a bit of entrepreneurial chops and was also a founder and a CEO of FS Card. Marla, welcome.
Thank you so much, Peter. And you should describe those as hard-earned chops in the entrepreneurial space.
Hard-earned chops, obviously, and I'm sure a lot of our founders who are joining us today can relate.
Absolutely, always.
Marla, thanks for joining us. We've got a few minutes here, and obviously we'd love to benefit from your knowledge. You've done a lot of things over your career, and in recent years, it's been focused, mainly around financial inclusion and social change. I'll ask you both a simple and a difficult question to get us started, but why is financial inclusion important?
Yeah, I mean, Mayel touched on some of that in her remarks that she just laid, but I think it's certainly given the moment that we're in, where we've all become much more conscious about what it means to have full participation in society and the ability to execute and take care of the things you need to take care of in your life. Financial inclusion is very much a part of the underpinnings of making all of that work. It is all about having access to the capital that you need, having access to credit that enables you to function productively, the ability to transact safely, the ability to store your value in ways that allow you to access it when and where needed. And the fact that so many people, even in societies like the United States, where we have fairly broad coverage, there are still millions of people all around the world, and including here in the United States, that are not able to meet all of those requirements that I just described on a day-to-day basis. And that leaves them searching for and reaching for, in some cases, much higher price kinds of solutions to meet those needs, much less widely available and inconvenient ways to solve some of these problems. And it leaves them unable to participate fully in our society. And I think that is to all of our detriment. It reduces, and it serves as a lag on GDP, even if you want to go all the way to the highest level impact of it. So to me, I consider it one of the most foundational basic needs in order to be functioning in society, and cannot stress its importance highly enough.
Yep, absolutely agree. Tell us about your work at School Foundation. I mean, what are you guys doing there to move the needle? I know, big, philanthropic organization. Obviously, you guys are focused on a number of different issues, but helping support inclusive growth is one of them. Tell us a little bit about what you guys are doing as it relates to financial inclusion.
Yeah, so one of the things that you touched on, and what we are most widely known for, is we give out the Skoll Award for Social Entrepreneurship, where we look for innovative people that are coming at problems in new ways, that are focused on addressing the most deeply entrenched and challenging problems in our global society. And so from an inclusion perspective and sort of financial inclusion, we look at that in two key ways. One is about looking at who is in the emerging, what we're calling the emerging power category, right? That's people who have in the past been, for one reason or another, excluded from participating, and connecting those communities with the organizations and with the individuals that have long held power. So we call that kind of connecting emerging power to existing power, getting a seat at the table, ensuring those voices are heard, creating visibility and empowerment for those communities is very much how we get it. And we look for organizations. I'll call out one just to give you an example of who we look to work with. Common Future is an organization that some of the entrepreneurs here may have heard of. They do great work on developing a training process and getting organizations ready to pitch, to raise capital, to be good stewards of capital, and participate and enable through that readiness to get other organizations, other companies funded and participating in our society. So kind of creating that ultimate sort of systemic change and broader participation is one part of it. Second is stakeholder capitalism, right? Addressing the large corporate tendency, and it's not limited to just large corporates, but I'll highlight large corporates, to focus on and emphasize shareholders above all others, and really redefining that as stakeholders. And that movement has picked up some steam here recently with the Business Roundtable and others making an announcement to this effect. But the importance of considering what is happening for customers, what is happening in your environment, what is happening to your suppliers, what is happening to your employees, and what's happening to your shareholders is, in our mind, the right direction for us to take capitalism more broadly. So we support efforts to move in that direction. And then the third piece, which I'll highlight, by virtue of being a foundation, and by the fact that I myself have not grown up in philanthropy, right? I grew up in financial services and have been in fintech for quite a while now. I bring a perspective to this around what we do with our endowment, and enabling access to capital and ensuring that we are allocating our capital as large limited partners. We have a $1.8 billion endowment. So we are a limited partner in all kinds of funds across a whole host of asset classes. And we are very much committed to allocating that capital in ways that will also allow economic inclusion and foster and facilitate, and even in many ways compound the work we're doing from an economic inclusion perspective on the program side. So a bit of a mouthful, but that's how we think about our economic inclusion work.
Okay, thanks for that. I mean, I'd like to go a little bit deeper with regards to how you're allocating capital. Obviously, sizable endowment.
Yep.
You have an opportunity to, really see a lot of, up and coming emerging managers that probably wouldn't have had opportunities in the past. You could move things in a positive direction depending on how you allocate capital. So, do you want to tell us a little bit more, go a little bit deeper in what your strategies around capital allocation?
Sure. Yeah. And importantly, I really think about this not as we want to carve out a specific part of the endowment and make it available, right? I want this to become a part of our process, right? I want this to be a standard consideration, a top of the funnel consideration, and a bottom of the funnel where the dollar is actually going, all the way across our look at all of the asset classes in which we participate. We are heavy investors in venture capital and in private equity. That, as you can imagine, Peter, right, is informed by Jeff Skoll's own background, having built eBay and having received the benefits and seen what happens with venture capital. We are big investors in that space. And what we are looking at now is how we take advantage of the opportunity in an area across this asset class that we think presents outsized opportunities for return, primarily by virtue of the fact that there just hasn't been that much participation, right? And our view is by investing in Black-led, Latinx-led, women-led funds, LGBTQ-led funds, we can find opportunities to generate some alpha, because the fact is there just hasn't been that much competition in this space yet. What we are actually hoping, and I'll say this kind of paradoxically, right? What we would love to see is basically regression to the mean in this space, right? There's no reason to believe that there should be outsized performance here over the long term. But in the short term, where there hasn't been that much opportunity to participate, there should be opportunities for us to capture that before it regresses to the mean, but ultimately crowd in other funding and bring more money and bring more capital to the table. I'll give one example of an organization we really like and that we recently funded, and I've written about this on LinkedIn. We've invested in a fund called A&H, which stands for APHIS and Heritage. And it is led by two Black male investors who have an idea about working with 401 with employee stock ownership plans inside of small and medium-sized businesses, partnering with them and enabling those workers, the employees of those businesses, to buy the business in partnership with them as the equity investor, and enable an incumbent business owner to exit. And it's not the IPO type exit that we are all here thinking about and wanting to chase, but it develops an opportunity for much broader economic sharing and some sort of market-oriented returns in the equity investment side for us, but most importantly, create some economic participation in communities that often don't have it. And we're really excited to see that grow and take shape, and then hopefully demonstrate the viability of this as an asset class with a different kind of ownership structure. That's where we get excited, right? Where we see something that's novel, that creates broader economic opportunity, and it fits our interest in bringing more people into the fold. So that's one example that I can talk about that we have invested in and allocated capital to. We're an LP in that fund.
Great, love that story, and I look forward to hearing more about the opportunity. It does sound like a really unique and interesting model, so understand why it would be of interest to you guys, and absolutely, good example. Let's try to come back a bit to what's going on right now with regards to the dislocation that we're seeing being brought on as a result of the pandemic. Do you mind sharing your perspective of how over the last year and a half, this dislocation is teaching us different lessons in terms of why fintech and financial inclusion needs to be front and center as we move forward. I mean, we've heard the stories about governments not necessarily being able to provide in an efficient manner the support that they wanted to folks at the bottom of the income ladder, particularly at the height of the pandemic last year. What's your perspective on that?
Yeah, I mean, I think one of the big opportunities and one of the reasons why I am so excited about fintech and have been for the last decade almost really is about the ability to take a demonstration of viability and attractiveness of fine segments of a population, because the fintech community can do something focused on Android users in a particular subsegment of a country that have to solve a particular kind of go-to-market problem, right? And maybe that's they need about be able to be a smaller micro merchant, and it doesn't have to reach the kind of scale that big incumbent financial services providers need in order to justify being in an arena. So in many instances, part of the reason for being unbanked, underbanked, not having the kind of access is that it can be expensive to provide services in a safe, transparent, reliable way. And we are talking about populations that may not have tremendous amounts of resources at their disposal. They may not be transacting with the degree of frequency or size and volume that might make it work for large incumbent, massive infrastructure kinds of organizations. But a nimble, highly focused fintech participant in this market can come in and reach, and make it work with a population of, customers that might be a few 100,000, right? And that doesn't sound like work worth doing if you are a large bank. But if you're a fintech provider that can build this with a couple of programmers and with the cost of technology is just plummeting, that can be a demonstration, and then ultimately can help show to those incumbents and to those big market participants that actually there is a way to serve this. And what I've seen is a cycle that goes from sort of demonstrating viability, partnering with those financial services firms, and then really rolling out and scaling the solutions that have been demonstrated to work. And in some cases, even leading to acquisition and for integration into the financial underpinnings, right? And one of the examples I'll use around that technology is remote deposit capture, right? The remote deposit capture seems old school now. Like it's a well-established piece of the offering in fintech and financial services broadly. But that started as a small fintech demonstration, and people didn't trust it. And there was no way that, let's say Bank of America, right, or Barclays or somebody is going to adopt that and run that test, right, on their customer base, where they cannot afford for that to go sideways. But once that's been demonstrated, now that's a very much an integrated piece of what every financial services firm is out there offering. That to me is the power and the possibility of fintech to find the next kinds of opportunities like that. And I love that.
Thanks. I mean, you raise a really interesting point, and I'd like to, go a bit deeper because it seems as though only fintechs are going after the unbanked, right? And you mentioned why for some banks it's just too costly an exercise to go after a market of a couple, 1,000 people, 100,000 folks. Where for fintech that proves the business. If they can prove it in that small population, then there's probably an opportunity to scale. Is it that simple? Is it just due to cost that big financial institutions seem to be ignoring this market? I mean, we all know what the economics of the market is in terms of opportunity, but it seems as though only small startup companies are interested in going after that 200 million SMEs that are underserved, or the 2 billion people who are unbanked.
Right.
What is the reason for the divergence in strategy between the incumbent players and the smaller, more nimble folks who are coming for those incumbent players at some point in time as well?
Exactly. And I think you are touching on, and I can tell by the way you are even asking the question, right?
Very excited.
You already know it's nowhere near as simple as just efficiency and the economics of serving that population, right? It's also about proximity and shared understanding of the needs of that population, and flat out, right, allocating that marginal resource to solve the problems of this population when you have a large profitable business that could maybe squeeze out another penny per share or something out of your existing business. That's an easy decision, right? So I do think there are fundamentally some ways that banking continues to run the risk of disintermediation because they tend to be so legacy focused, right? And relatively short-sighted in making some of those kinds of investments. When I think about organizations like Isuzu and what that team has been able to do by digitizing solutions that those communities have used for years, right? And they know that because they are from those communities, right? So part of this is also the lack of diversity, right, in a lot of instances in the big, large financial institutions. And they have tended to not look at how can you take a model like an Isuzu and digitize it and make that available to the same population that we might be able to serve and bring into our institution with this kind of a product. So that proximity and that understanding of the lived experience, those are communities that have solved problems for generations and maybe outside of the financial mainstream. How can that be adapted and adopted in digital form? So that, banks miss that in many instances. Big financial institutions do.
Yeah, sure. Marla, we're running out of time, so I just want to give you one more question, just to get a response from you before we end up. But what are you seeing that's most exciting for you and you guys at school with regards to what fintechs are doing to move the needle? Are there any particular products that you're seeing being built that are really exciting and you guys are looking forward to seeing how they evolve? You mentioned a few companies. Are there others? But what excites you most about this space?
Yeah, I mean, I just mentioned one example, right, that really points to the fact that bringing in additional perspectives and valuing diversity and empowering voices can lead to real creative outcomes and bring more and more participation into the broader market. Other than that, I guess what I would highlight is I'm really hopeful and really intrigued by the possibility of what artificial intelligence can enable with some very specific focus and with some real emphasis on exactly what questions we are asking artificial intelligence to address, asking it the questions with some nuance, right? Don't just make this as efficient as possible, make it as efficient as possible for as many people as possible, right? Asking it the right questions, but deploying artificial intelligence on the side of the user, on the side of the consumer, and making it making better selections for the individual, right? And for the small business, I think has huge promise. And I've seen baby steps in that direction, and I'm really excited to see that really take hold. So that's one thing I'd highlight.
Okay. Well, look, Marla, we could talk about this subject for hours, but unfortunately we've run out of time. I want to thank you so much for joining us today, and we look forward to working with you and school going forward on this really, really important issue. But thanks so much for joining us today, and look forward to speaking with you again soon.
That sounds great. Thank you so much, Peter. It's my pleasure, and good luck to all the entrepreneurs out there. Keep pushing.
Good. Thanks. Okay, folks, we hope that you've been enjoying the event thus far, but now is the time you've all been waiting for. Our founders are ready, and it's time to head over to the stage to see their pitches. We've set up 3 different stages, emerging, growing, and scaling, and you're free to hop in and out as you choose. It probably won't be possible for you to see all of the presentations over the next 40 minutes or so, but you'll get a chance to meet with the founders afterwards in their expo booths and in the networking session. So I believe you should be seeing on the left-hand side some different stages set up. We welcome and invite you to join those stages, move around as you see fit, try to take in as many of the presentations as possible, and then we'll see you guys back here in around 40 minutes or so. So enjoy the show. Go look and see what these 20 wonderful founders are building. See you soon.